Welcome to our weekly roundup of key business developments in Sri Lanka. I'm Nishani Pigera. Let's first take a look at the main stories for this week. Major revision to import tax structure ahead of elections. $200 million loan from ADB. And worker remittances up in August. In our top story this week, on Wednesday, the Cabinet, in a major decision, revised the import tax structure, announcing new measures to reduce cost and boost domestic production across various sectors into manufacturing and trade. The changes include revision and exemption of import tax covering 225 codes, which include brown sugar, footwear, packaging materials, electrical machinery, and raw materials for the rubber industry. In addition, revisions were also made to the cess levy and new directives were imposed to the special commodity levy. According to Bandulu Gunawardena, cabinet spokesperson, the changes are aimed at reducing levy inconsistencies and encourage environmentally sustainable practices. Such a major decision comes from the proposal made by President Ranil Wickremesinghe just ahead of the presidential elections next week. The elections are considered to be crucial as it would set the direction of the economy for the next 5 years. Even now, multiple polls show that no candidate has been able to secure a majority, increasing the importance of preferential votes. Despite this, major competition is seen between President Ranil Wickremesinghe, Sajith Premadasa and Anurakumara Dissanayaka. On a related note, Sri Lankan dollar bonds also saw a sell-off with the 2030 bond falling to 49.9 cents to the dollar, the lowest level since February this year. This comes as there is no clear sight of who will win the elections and the intention of opposition candidates to renegotiate the terms agreed under the IMF program. Sri Lanka is to receive a $200 million loan from the Asian Development Bank as a part of the government's ongoing efforts to stabilize the country's financial sector and economic recovery. The loan is a second tranche of the $400 million Financial Sector Stability Reforms Program. This will be an additional financial support to the current IMF reforms. Worker remittances in August was a significant $578 million, bringing the year-to-date inflows to over $4.2 billion. Strong growth in worker remittances is bringing in the much-needed dollar inflows to the country, helping to reduce the balance of payment deficit. Currently, Sri Lanka's foreign reserves stand at around $6 billion, covering just over 3 months of imports. According to KJ Veerasinghe, Chief ITO Negotiator, the International Trade Office has decided to informally stop all discussions with bilateral counterparts until the conclusion of the 2024 presidential elections. Due to this, ongoing talks with India, China, Indonesia and Malaysia have all been paused. Sri Lanka's private credit grew by 60 billion rupees in July 2024 on top of a 74 billion rupee expansion a month earlier. The recent expansion brings the year-to-date disbursements to 206 billion rupees. Despite this, uncertainty surrounding the presidential elections could slow down the pace of credit expansion in the coming months. Meanwhile, net credit to the public sector expanded by 64 billion rupees in July. In our weekly tourism update, during the first 8 days of September, over 33,000 tourists arrived in the country, bringing the year-to-date total to nearly 1.4 million. Daily arrivals were 4,138 in the month, down from the 5,310 recorded in August. India continues to be the primary source market, followed by the United Kingdom and Germany. Tourism earnings in August grew to $282 million, up 34% from a year earlier. Tourism earnings in the first 8 months of 2024 surpassed $2.1 billion, significantly higher from a year earlier. The country is targeting to generate $5 billion in earnings in 2024 from about 2.3 million visitors. The all-share price index at the Colombo Stock Exchange continued to be in bearish trend. The market remained muted on uncertainty surrounding the presidential elections next week. The index is now at a 6-month low, with year-to-date returns having turned negative. So far, the market has lost a staggering 650 billion rupees market value since the announcement of the presidential polls. At the Treasury bill auction held on Wednesday, yields on all maturities rose for the 6th consecutive week. Bids amounting to 254 billion rupees were received, of which 164 billion were accepted. The Sri Lankan rupee depreciated against the dollar this week, with the central bank's indicative mid-spot rate ranging around 299 to 301 rupees. The central bank notes that the rupee has strengthened by 7.5% against the US dollar in 2024. And with that, we wind up for this week. Do subscribe to our YouTube channel at the link below for regular updates on economic and business developments in Sri Lanka. Until we see you again next week, thank you for watching. Stay safe.